I will apologize right up front. I talk very quickly, and I'm very conflicted. I wanted to be a stand-up comedian. My father wanted to be a professor. My mother wanted me to be a priest. So I'm all over the map. My goal is simple. These are three very compelling papers. They're all indirectly related to CRA. I will hopefully have the wonderful SBA paper move into that category as well. A little about myself. I started my career actually below entry level at a bank. I was a microfilm reader trying to figure out money market mutual fund transfers in the late 70s. Then I became a teller. I worked at every position in a bank, operations, branches, lending, mortgage lending, commercial lending, private banking. I hit that one especially. And they were all a step up from my days as a grill boy at McDonald's. Maybe. Question was asked in the earlier session about why banks don't get started. I actually have the privilege of being a co-founder of the last bank issued a FDIC authority in the Midwest out of Chicago in 2008. I'll tell you why, because margins are completely different. Competition is ridiculous. In my little town of Ann Arbor, Michigan, we have 21 other banks in a 130-person town. And whether anybody likes to admit it or not, the paperwork and the process we went through was about 6 colonoscopies to get it done. So I think these things factor in. They do. I also had the privilege of starting a title company, which in many ways in our industry is a license to print money. I also got to start 2 mortgage companies over my time, including one with Countrywide. That was a bad day when we decided to be partners with Countrywide. 3 different articles, and I'm not going to do them in order, but maybe the order will make sense when I'm done. Real effects of geographic lending on banks. The real impact of CRA on a community bank is the ability to manage capital or diminish the management of capital. CRA is a wonderful program for those who benefit, and for banks, it's more of a stick than a carrot, if you will. And it was a great paper. It talked about reputational risk and community targeting. There is one very major flaw in the 1977 Community Reinvestment Act, and that is what is considered a small business. So it's under $1 million and typically under 20 employees. Well, in my market, that eliminates almost all businesses other than micro businesses. So simple ones, restaurants. Nope, don't qualify. But in a market like I'm in, there's a lot of startup restaurants. It eliminates all finance companies, lawyers, attorneys, small practices. So what you find in CRA small areas is there aren't that many new businesses being formed. So you find yourself, and it was a great conversation about competition, basically stealing from other banks, the customers. There's not that many to steal. So you're trying to justify that you're active in your communities, but there aren't that many businesses to actually lend to. It's a minor problem. I'm going to give you a real-life example of a situation that's massive CRA, but it doesn't qualify. So I was born in the wonderful city of Ypsilanti. Everybody in the room other than maybe the doctor there knows where Ypsilanti is. Ypsilanti is a very small town. Next door to Ann Arbor. Ann Arbor is an extremely wealthy town. Ypsilanti is an extremely poor town. The whole thing is low to moderate income. And we bank a business, a plating company, nastiest business in the world, hideous business, about 50, 60 employees 10 years ago. Now it's 250. We helped them with a building. It is complete CRA. They're the largest employer in that city. Don't get any credit for CRA. Fortunately, in Michigan, the people who do FDIC reviews actually get that. And you go, oh, that's an odd story, Peter. Who cares? Well, in Jackson, Michigan, another market we're in, we have another plating company. Had about 90 employees. Now it's 250. Got a USDA loan for $6 million, we did. And they employ extra 160 people in a rural market. CRA matters. CRA is important. The definition of what CRA is not necessarily where it should be. And here's the cheap shot coming. Credit unions don't pay tax, aren't subject to CRA. Please explain that one to me. Internet lenders, big bane of our existence, subject to CRA? Maybe, don't think so. Could be wrong. Somebody will correct me, I'm sure, later on. National banks, CRA. How do national banks get around CRA? They create programs for national. Do they really care about micro businesses and small markets? No. In my world, we refer to the big banks that control somewhere between 75 and 80% of all the deposits as the five ugly sisters. They could care less about what we do or CRA. Just reality, sorry. It is a great article in terms of saying CRA is very important, but then again, there's a twist in here, and he did a great job of mentioning this. Banks between 250 million and $1 billion don't have to report unless they want to. I could argue, and there's some people in this room who would probably agree, our entire job, if you're a bank between 250 million and $1 billion, is small business lending. But you don't have to report. Doesn't make a whole lot of sense. The next one on CRA is a very troubling paper. It's very well done, of course. Although I don't think you picked up your accent, sir, in Michigan when you were getting your doctorate there. I'm pretty sure on that. Basically, it came to the conclusion that no matter what, those of us who actually care about CRA aren't doing a very good job with minorities in terms of servicing their needs. Anybody want to really hear that? No? Is it true? Probably. Did a great job of saying maybe it's not. I actually went through and took it the other route and made a whole list of reasons why it isn't true. Of course, probably the most compelling reason why it is true is size matters. So those of us who have dealt with mortgage business know mortgage commission is now based almost exclusively on size of the loan. So if you're a mortgage originator and you're doing a deal and one of your jobs is to educate your borrowers in low to mod income tracks, it is a statement of fact that those deals are smaller. So you're going to work on a $500,000 deal where you get a cut of the action, or you're going to work on a $50,000 deal? It's obvious. We've created our own problem. It goes a little step further. When I was in KeyBank with Kevin Riley, nice, strange oddity that we were at the same table yesterday. We both worked for the same bank years ago. One of my jobs as a private banker was to find the best talent in the bank and have them become private bankers. How many private bankers are working with low to mod income track people? And I don't think KeyBank was alone in that. Certainly Wells Fargo was in that. But I think that's a common thing. Best talent rises to different positions. So banks ourselves are working away from that. It's a very good article to say, hey, CRA is an important function of who we are, but is it addressing the right issues right now? I want you to think about, before I go into the SBA paper, a couple different things different from 1977 and the regulation, which was really to stop redlining. Interstate banking. How much interstate banking was done in 1977? Branch banking outside of small geographic areas. I worked for KeyBank. We did a little scammy thing, and Sturgis, Michigan was close enough to the Indiana border that we were able to go between multiple states. Anybody ever heard of Sturgis, Michigan? Maybe Kevin, but nobody else. Technology. Whole different world on technology. Who would have thought internet lenders would be doing loans? Who would have thought payday lending would have been where it is now? Not me. Last paper was the financial crisis and the role of the government guaranteed loans. I'm stating for the record, the SBA program is fantastic. It's one of the best things the federal government did. After last night, I'm giving Cynthia Blankenship credit for that because she hung out with Barack Obama and got it done for us. Thank you, ma'am. The SBA program's great. Why is it great? Because it gives us a guarantee. So the SBA program does longer loans at better interest rates. Customers like it. It is a great program. Why did it work during the crisis? So I have this unique, kind of bizarre claim to fame. We started in the middle of the crisis. We have no bad debt. We like to say it, and everybody says, well, that's an egotistical and jerk remark. I got a 0 Texas ratio for almost every quarter. So we're unique. We started after the crisis. The guarantee matters. It does help banks' backbone, and it's a good thing. The other thing is, and it was mentioned briefly in its paper, it's mentioned quite a bit more, we're able to sell those loans if we want to. We're a community bank. We don't have outlets to move our assets. We're not big guys. This gives us an outlet to move our assets and make money. So I hit briefly on the fact that small businesses under 20 employees and $1 million don't make sense for CRA. SBA has moved its rules higher so that you can get more deals done, and that's very, very helpful. So a couple things that could fix CRA if you wanted to keep it in place, just to be clear. Again, changing loans under $1 million. CRA and its components are judgmental. I think it was mentioned in one of the papers that 98% of the banks receive S or better. It's very difficult to not give a bank a good grade when you don't have hard evidence that they're not trying hard. Of course we're trying hard. So maybe if the CRA was there, there would be more evidence to support what you're doing, not necessarily the results. I can't make people start businesses. I can't make people buy homes. So I'm going to go back to my Ypsilanti conversation. 75% of the city of Ypsilanti housing is non-owner occupied. Why? Because after the crisis, you could go in and buy houses and rent them and make money. It's horrible. So the owner occupied. So I'm being judged on CRA. Nobody will buy a house. They'll all become rental properties because you can make money because the housing stock fell so bad. Unintended consequence impacts me directly. Kind of my last comments about that. I'm not saying that CRA is necessarily wrong, but it should be more judgmental in terms of what it should be for community banks. To compare my CRA with the 21 banks in Ann Arbor, 17 of them, which aren't even housed in the state of Michigan, they're housed elsewhere, makes no sense. So I think it should be, again, what you're trying to do and less results based on the actual data that's in your chart. And then I'm going to make one more comment because I got the extra minute and I promised myself I was going to do it, although the regulators in the room might be kind of cheesed. We're told to collect this data like HMDA data. With modern technology, community banks should be just given a template. Here is what you do, and here's how you put it in your system. We use a thing called HMDA relief. Some of you guys might use that. We spend hour upon hour on data point for this stuff that goes, might be reviewed, might not be reviewed, and then are judged on the quality of that reporting. Just create a template with modern technology. The example I use in my own life, I have a son who buys and sells printer cartridges all over the world. Ridiculous job. U of M degree going for good use. Sorry, Taylor, yours is, but not his. Anyway, but he has to fill out about a 60 data point thing or the deal doesn't get done. This isn't rocket science with modern technology. I mentioned that earlier. Tell us, give us the equipment to use it, and we might do a better job of reporting. Just a final comment. At any rate, I hope I got you thinking about CRA, and I hope you all take the occasion to read these 3 papers. They're all quite good. Thank you.